Let us consider an example. X sends out goods costing rupees 6 lakh to Y. Consignor's expenses are rupees 10,000. 1/10 of the goods were lost in transit. Insurance claim received is 6,000. Compute the net loss on account of abnormal loss. Pass journal entries for loss. So let us see. X sends out goods, cost is 6 lakh. Consignor expenses are 10,000. 1/10 of the goods are lost in transit. So what is our total loss? Cost of goods is 6 lakh. Transportation cost or consignor expense, I am writing it as direct cost, is 10,000. That's it. So the total is 6 lakh 10,000 is the total cost of the goods. 1/10 of this is lost. Therefore, the loss is 1/10. How much is that? It would be 61,000. Insurance claim received is only 6,000. This is insurance claim. In that case, the net loss on account of abnormal loss would be 61 minus 6,000, 55,000 would be the net loss on account of abnormal loss. What would be the journal entries? If we look at the journal entries, consignment account would be credited with the full value of 61,000. So what is the entry? Entry is we create an abnormal loss account. Abnormal loss account debit 61,000 to consignment. So the consignment account now reflects the normal profits. Next, we see that there is an insurance claim of 6,000. Combining the two entries, I will get insurance company account debit 6,000, profit and loss account debit 55,000 to abnormal loss account 61,000, and in this manner the abnormal loss account is closed. Let us consider another example. Actually, it is a continuation of the same example. Let us see. X sends out goods costing 6 lakh to Y. Consignor's expenses 10,000. 1/10 of the goods lost in transit. Thereafter, there are consignee direct expenses of 10,000, and 1/10 of the goods received were again lost by theft in godown. Insurance claim now received is 12,000. Compute the net loss on account of abnormal loss. Now we had already computed the initial loss. So there are two kinds of loss. One is abnormal loss in transit, and another one is abnormal loss by theft in the godown of the warehouse, in the godown of the consignee. Cost of goods is 6 lakh, expenses 10,000, totally 6 lakh 10,000. Thereafter, 1/10 of the goods are lost. So now we have only 90% of the goods. What is the value? Since 1/10 is lost, I am removing the value of 61,000 from this and arriving at the net stock available now, which is received by the consignee as 5,49,000. 5,49,000. Okay, so this is abnormal loss in transit. We have already got a value of 61,000. Now we have 5,49,000 and 1/10 of these goods are now lost by theft in go down. However, before that, what happens is, after this point, these goods, 5,49,000 goods, are taken to the warehouse and the cost incurred by the consignee is another 10,000. So that is 5,59,000. This is the total cost of the goods. 1/10 of these goods are now lost. Therefore, what is the loss now? This was loss in transit, and now we have loss by theft. Five lakh 3,100. 5,03,100 is the total value stock, but this is the loss. So what is the value of loss? One is 61,000 and this was 55,900. The net loss on account of abnormal loss. So what is total loss? 61,000 plus 55,900, giving us 1,16,900. 1,16,900. Insurance claim is only 12,000. Therefore, net loss would be 1,04,900 is the net loss. Net loss on account of abnormal loss. But the consignment account, mind you, would be credited with 61,000 and 55,900 or 1,16,900. Since we get insurance claim of 12,000, the net loss which will be transferred to profit and loss account would be 1,04,900. Let us try one more example. Praful of Pune sends out 100 boxes to Guru of Chennai costing 2,000 each. Consignor's expenses 40,000. Consignee's non-selling expenses 9,000 and selling expenses 5,000. 1/10 of the boxes were lost in transit. 2/3 of the boxes received by the consignee were sold. The amount of consignment stock will be. So now we are valuing consignment stock. 100 boxes. So this is number of boxes. Okay. This is per unit cost, and let us say we have total cost. So we are talking of 100 boxes per unit cost of 2,000. Therefore, we have a total value of 2 lakh. Consignor's expenses are 40,000. If you are talking of an expense of 40,000 for 100 boxes, you are actually talking of a cost of 400 per box. Consignee's non-selling expenses are 9,000, selling expenses 5,000. But before that, 1/10 of the boxes were lost in transit. 1/10 were lost in transit. So the consignee received only 90% of the consignment. So what is the value now? Right now, our cost is 2,40,000 for or 2,400 per unit. This is the cost for 100 boxes. 1/10 is lost. Therefore, now we have minus 10, 1/10. So you have only 90 boxes. Per unit cost is the same and we lose 24,000. Because cost of 1 unit is 2,400, cost of 10 units lost is 24,000. So we get 2,16,000 is the cost of 90 boxes. 90 boxes cost 2,16,000. Two-thirds of these boxes were sold, but before that, consignee's non-selling expenses are 9,000. So mind you, these 9,000 rupees expenses are met by the consignee on just 90 boxes. On just 90 boxes. So what is the cost per unit? Total is 9,000. By 90, we get 100 per unit. So what is the cost now? 2,25,000. 2,25,000 for 90 boxes. Therefore, the cost is 2,500 per box. 2,500 into 90 would give us 2,25,000. Two-thirds of these boxes are sold. So what is remaining is only 1/3. So what is the amount of consignment stock? 1/3 of 90. We are talking of 30 boxes. And what is the cost? 1/3 of 2,25,000, which is nothing but 75,000. So what is the value of consignment stock? It is 75,000. Option B, 75,000 should be the correct answer. Please note that in this case, consignee's non-selling expenses of 9,000 is incurred only on the 90% or the 90 boxes which were received by the consignee. So 100 boxes at the rate of 2,000 each, total cost 2 lakh. Expenses, consignor expenses 40,000, that is 400 per unit. So we have totally 100 boxes, total cost is 2,400, 2,40,000. However, in transit 10 units are lost. So now you have only 90 boxes. What is the value of 90 boxes? It's at the rate of 2,400, 24,000 goes out, you have only 2,16,000. Next, what happens? Next, consignee incurs some expenses, that is 9,000 expenses. Since they've mentioned it's non-selling expenses, we assume it is the expenses, direct cost, it's expense incurred in transporting. They are expenses incurred before the goods reach the warehouse of the consignee. If that is the case, total cost is 9,000, but we have only 90 boxes, therefore per unit cost is 100. 9,000 divided by 90, we are talking of 100 per box. So what is the total cost of 90 boxes? It is 2,500. Totally 90 into 2,500, 2,25,000. 2/3 is sold, 1/3 is not sold. Therefore, your closing stock is 1/3 of 90, 30 boxes, 1/3 of 2,25,000, that is 75,000, or 30 boxes into 2,500 equal to 75,000, whichever way we